All right, we're live. Great.
Okay.
Fantastic. Good morning, everybody. Good morning, Professor Kling. I'm very happy to have Professor Kling with me this morning for a somewhat impromptu conversation. We'll get right to it. A couple weeks back, maybe 3 weeks ago, I wrote a little post um, on Random Walk. I called it the Beggar the Neighbor trade. It's sort of part of a running theme, musing on a bit of a peanut gallery's musing on China because I'm not a China expert. I just sort of look at the data that comes out and do my best to surmise what I think might be going on with all the attendant caveats. And my general model has been that both as a matter of um, industrial policy, but also just call it skill. I don't mean to assign a pejorative to it. China seems to have the plan of making everything for everybody everywhere and buying little to nothing as possible from everybody else. Um, and from a trade perspective, we'll get into a little bit more, in a little bit. But the disparity of China's exports relative to its imports and relative to the rest of the world has gotten so extreme that Goldman Sachs, not a trade protectionist by any stretch of the imagination, did run a little report. They called it the beggar thy neighbor trade, and they, we can get into more of the details later. But the gist of it was that while this would be net accretive to China's GDP over the next couple of years, they estimated a small but still meaningful GDP drag to the rest of the world by virtue of China's industrial machine. Really a combination of two things. One is sort of crowding out domestic manufacturing. For example, German auto has been hit particularly hard, but certainly other places as well. I'm loath to use the word, flooding or dumping because that's a kind of, where he sweats, I perspire, she glistens kind of thing. But basically by producing, frankly, really good, really cheap, and perhaps subsidized goods to the rest of the world, that it will put pressure on domestic industry. And, to my mind, that sort of it challenges, or at least trying to understand what the response might be from a traditional trade economist perspective. It feels like they might say, and this is where, Professor Clinton is going to correct me where I'm wrong. It's just like maybe China or Germany rather. So Germany's auto manufacturers are going out of business, but I guess the trade economist says, well, but you should enjoy the consumer surplus of cheaper cars, and it will be better for you in the long run, maybe or maybe not. I don't know. Either way, that's sort of where I'll turn the floor over to Professor Kling, and sort of like maybe that's the first question: is should Germany just smile and take it because now they get cheaper cars?
Well, let me again speak. The traditional trade economist, for one thing, is not a Keynesian. And a Keynesian emphasizes demand, that there's a constraint on on economic output based on how much demand there is. And from the standpoint of traditional economics, that's crazy. Like we have unlimited wants and demand is not a problem. So the standard view would be you don't worry about demand. If China doesn't want to demand stuff and they want to supply stuff, that's just fine. Like, yes, you should take it. Um, Now, that traditional point of view doesn't weight any particular industry above any other. It's like, okay, your workers don't have to work in the auto industry; they can work somewhere else. So the main traditional point is you just don't have to worry about demand. And so if you don't have to worry about demand, there really is no such thing as beggar thy neighbor by flooding them with supply, because there'll always be enough demand to employ everybody in Germany or any of China's trading partners.
So in other
From
words, the savings that they'll get from cheaper cars, they will reallocate somewhere else, and that will create new jobs elsewhere. Is that
Yeah,
sort of it?
and another related point, even if people who believe in that demand matters wouldn't say that um, that Germany is helpless when China increases supply and doesn't increase demand, because you have domestic policies that can increase demand. So Scott Sumner, who describes aggregate demand as something that the monetary authorities control, then you know any loss of demand that comes from the trade sector, the monetary policy can offset. He would say that. So that's sort of even if you believe in a kind of a demand controlled economy, which I don't actually, it's the domestic policymakers are not helpless.
So Scott
Again,
Sumner would say if they wanted to reverse this, 20 basis point GDP drag caused by the China trade, you would just lower Germany should just, whatever the Bundesbank should lower interest rates and it will be all fine.
yeah, well, he wouldn't use interest rates as his indicator of monetary policy. He would just say
And two or
his indicator of monetary policy would be total demand. He'd say just the monetary authority should increase the money supply so that the forecast for nominal demand is as high as you want it to be.
but I guess in this case right, so they would be buying
But that,
they
yeah,
wouldn't have to do anything because they would reallocate their savings elsewhere.
well,
So
no,
is it oh,
the monetary authority presumably does have to do things, but he he would say that they should be buying bonds or buying foreign currency or buying something with it to increase the domestic money supply. But again, I don't see that. I see economic output is coming from people creating patterns of specialization and trade, and the challenge posed by, let's say, a sudden increase in Chinese exports is that it's going to break some existing patterns of trade, right? You're not going to produce what they are exporting. And takes a while for entrepreneurs to come up with new patterns of trade, new things for people to do.
so it's not nothing. Like Germany shouldn't just sit back on and or the rest of the world and say, "This is great. We now get cheaper cars. Sorry, BMW, you had a good run, but we'll catch you later." So that's not what you think they ought to do.
Well, it may be the best thing. The problem with trying to use, let's say, industrial policy or trade restrictions to counteract uh, a shock that comes from a sudden surge of Chinese exports is who makes the decision. I would say it's a parallel with censorship. If if you ask somebody, is there such a thing as misleading speech or hate speech or whatever? Most people would say yes. There's some, is there some speech you would like to see censored? Yes. Then the next question is, who would you like to do the censoring? Would you like government to do it? Oh no, that doesn't sound like a good plan. And that's kind of the way I feel about industrial policy. I get, in theory, it would be nice if you could insulate your economy from shocks of any sort, including trade shocks. But in practice, who is going to end up doing the insulating? And it's going to be some not always well motivated and certainly not always competent government policymaker.
But in theory, if we had like the perfectly just philosopher king who could calibrate these things with no self dealing, then I guess I'm still. I just still want to clarify. Like, the core model is that even without any intervention, ultimately Germany would be better off in the longer run. They just might take some temporary lumps, which perhaps could be smooth, but really in the longer run wouldn't have to be, is your view, or is
Well, yeah.
German
So,
economists' view.
so there are a bunch of stories I could tell that this uh, that would make it uh, this omniscient, benevolent, welfare maximizing government want to do something. One is that if you think China's entry in the market is only temporary, right? They can't sustain uh, export subsidies forever. So if BMW goes out of business, you're getting them to start up again is costly. So keep them in business, even though it's not the short run economically optimal thing because you know in the long run you're going to want them back. That's one story.
So the
Another
cost of breakage is higher than the consumer savings in the interim.
Right, that could be one story. Another story is the industries that are being destroyed or the jobs that are being destroyed are vital for national security, and that so you're willing to take a loss of, suboptimal economic policy because you care about national security. And finally, you could believe that certain industries build human capital that in the long run is going to matter to you. And so, in some sense, you're subsidizing those industries as an investment in human capital.
So in some ways, that's saying on the last one, it's almost saying there are second and third order effects that don't necessarily show. And like in others, if you're good in manufacturing semiconductors or cars, maybe you could get cheap semiconductors somewhere else. But in the longer run, if you stop doing those things, you will lose the ability to do other things later on. That
Yeah.
kind of thing.
Yeah. Well, Dan Wang's book, I don't know if you've read it yet.
I've read reviews. I haven't read the whole thing. Yeah.
Yeah. Yeah. You can probably get the gist of it from reviews, which is that China has developed skills in assembly and other and sort of uh, groups of practice in engineering that enable it to quickly tool up to build any new product. And so in effect they've made a big investment in human capital that's going to pay off, and you're willing to take losses in in your existing manufacturing in order to make that investment in human capital. And so you could argue that, well, conversely, Germany or the United States ought to be doing that. But you're right, that's not a first order effect. It's like right now, the mo- the way to maximize our welfare is to just accept their subsidized goods. But in the long run, we'd be better off investing in the human capital of manufacturing. That would be the Dan Wang story.
And are you persuaded by that story, or you have some doubts?
Once again, it's a question of who, right? Do I, in theory, an omniscient, benevolent government that uh, that helps us invest in human capital domestically is a great thing. Actually existing government making trade policy less likely to achieve great results.
So in some ways, your instinct then is to say, like, yeah, it's true. There might be a long-term cost to both first order effects of putting this business out of, putting these industries out of business, and the cost of restarting them is going to be quite high. There are also second and third order effects of sort of losing that core domain expertise and whatever fruits may emerge down the road. But the cost of government intervention is going to be higher than both of those things.
Yeah, I have low confidence that government is going to um, be nimble and wise in making its decisions on protectionism or subsidies or industrial policy in general.
So if we have Kaiser Kling, right, your view is even then you would say to to the people of Germany or President Kling, whatever it is, trust the process. You'd have a Sam Hinkie, trust the process. It will work out in the long run. My interventions will leave you worse off. I know it's painful now, but trust me on this one. I have all the economic data to, all the research to show that ultimately this will be better. Is that the view? Putting
Yeah.
politics aside.
Yeah, I think so. I think that's fair.
That's interesting. So then I guess just this is sort of a more technical question, but on the net drag to GDP, is that just a GDP problem? Is that an estimation problem that it's just very hard to capture what those second order effects or where consumer surplus isn't well measured by GDP? Like, why is Goldman? They're pretty smart. They're good at this. They're certainly not biased in favor of trade, protectionism. Like, why are they showing a net drag to GDP? And
I
should we Yeah.
I don't buy that their case. I mean, I think that first of all, this sort of macroeconomic modeling is not something I believe in.
Fair.
I just don't buy the whole process by which people do that.
Their GDP
And
forecasts have been quite good, I will say.
okay,
Yeah.
um, and the other thing is, again, you have this. If you believe okay, so I don't believe the theory that underlies their model. So I guess that's the simplest way of putting it. But
And
I
which
think
theory is that specifically?
just the theory that demand controls GDP. That GDP is there's a lump of demand in the world, and the size of your lump of demand gets you your GDP. I think GDP is is determined by your productivity and whatever however your society organizes to produce, the demand will be there. That's sort of my the challenge is sort of organizing to produce in some sense. Um, and and then I fall back on, all right, suppose I believe the theory that you're constrained by demand. Then I go back to the Scott Sumner point that you can control that with monetary policy. If you believe um, that demand is what determines GDP, then just use monetary policy to control demand. What happens with that, if you take that seriously, and you take it seriously that economic adjustment is difficult, you do get the fact that if a foreign country, if China floods you with imports in a particular sector, the demand is going to show up somewhere else, and it's going to take a while for that to happen. I mean, for auto workers to become home healthcare aides, right? That's the classic adjustment story of why you want to hang on to a particular industry. But
Right.
again, then I fall back on the question of do the government technocrats know which industry to hang on to? Uh, you know, my concern is that they will tend to hang on to the most politically powerful industry, and they will hang on at a cost that way exceeds the benefit. The cost per job saved could be $200,000 to $300,000 a year, which it often is with these sorts of policies.
Right, and even if you wanted to remediate the shock, these policies tend to live on well past the shock. They become
Exactly.
yeah,
Yeah.
that makes sense to me. But in Goldman's defense, they have a lot of caveats. They hedge a lot. They do specifically mention, that it's very hard to predict and model sort of the effects of any monetary fiscal response, which they would think is likely. So they're not. I don't think they're being overly deterministic with these things. But I just thought it was interesting that even with the consumer surplus, which they account for, like they still model a GDP drag, which they don't ordinarily do in the case of China trade. This is a new thing for them, which they stated at the outset was normally there's actually they forecast a lift to GDP, but in this case they don't. Um, Shifting gears for a second because I want to touch on what you said before, which is the sort of allocation of German auto workers to home healthcare or any auto workers to home healthcare aides. So like, that's a bit of a it's the learn to code argument a little bit, but is that, I guess, does that pass the smell test, right? Isn't there implicit in some of this, like a Schumpeterian creative destruction kind of thing, which is like, is there some possibility where, auto workers can't become home health care aides, or that's a very suboptimal outcome for them? Um, and is that just something that that we grit and bear, or like what's the response there, or they just figure it out?
Well, again, this is a question of who knows best. Like, I have a feeling if you leave it to the market, they probably don't end up as home health care workers. Maybe they uh, get, help start a robotics industry in Germany or something like that. Um,
What if they still help start street gangs? Or
well, yeah, right. That that could happen too. So, if somebody's wise enough to predict what the adjustment will be and to know what a better adjustment would be, well, then they can be the technocrat that solves the problem. But that's where I get skeptical on that score.
So your view is like, learn to code or become home healthcare aides. Like we've seen it empirically, right? In the US, we've had this major decline in manufacturing jobs, and part of that is because manufacturing's got a lot more efficient. But the sort of co-commitment or the offset has been the growth of healthcare jobs, which are predominantly female, right? And
Right.
I would assume you would think that that's that there's some invisible hand operating there, but there's also, there is a nature component too, right? I mean, I'm sort of tapping the conservative part of your brain,
Yeah.
perhaps, that to say, to push on that idea that, well, that the heavy industry folks, they'll just go do something else. They'll work desk jobs or they'll become nurses. And, it's almost not entirely plausible on its face, even if it might work in a kind of, value neutral model. But also, in our recent experience, it hasn't really played out that way.
Yeah,
Um,
my view is that in practical terms, adjustment rarely takes place by people moving from one sector to another. What happens is that the labor force turns over. So some of the older workers uh, in fading sectors retire early, and then younger workers enter where the jobs are. And there's no guarantee that we're that the jobs end up better for the younger people, but I think that is the trend. If you look at it empirically, real wages on average keep increasing, median incomes keep increasing. So, for in the Great Depression, a lot of uh, jobs like being cigar rollers or glass blowers for electric bulbs disappeared. And those people as the economy recovers in the late 1940s, they don't go back to being cigar rollers and glass bulb blowers. You have a different labor force in 1950 than what you had in 1930, and I think that's kind of what happens with any industrial shock. And what that means is there is some short run cost, but if the other industry is never going to come back the way it was, then you don't want to protect it. And that's, I think, often the case that, even if the auto industry is going to come back, it's going to come back very differently. And so just hanging on to the same manufacturing plants and the same workers isn't going to solve the problem.
but I guess again, and I'm being explicit here to sort of tap your conservative instincts here is like, isn't there something problem? Like, are you really persuaded that there are no trade offs either measured by economic models or not? If you have whatever people, men specifically, I don't know,
Yeah.
that have evolved for, to do these kinds of work, and all of a sudden to say, well, sorry, you're getting outcompeted. China's just that much better at manufacturing, and you're going to either have to go do something, a little bit more office bound that requires a little more impulse control, and this sort of the industries, that may have been hard and grueling in some respects. Like nobody, we tend to romanticize manufacturing jobs, but as you mentioned, like being glass blower, cigar roller, these aren't, um, the most glamorous things in the world, and were pretty hard. But at some other, is there some spiritual, for lack of a better word, something that's lost or not accounted for, in those expectations that people just do, they just go find something that okay, real wages might go up, but what if they're miserable all the time, or something like
Yeah.
that, or they lose the raison d'etre, something like that. I don't know.
Yeah, well, there's certainly, there are definitely people who are going to lose when there's a shock to the economy and uh, certain jobs become uneconomical. That happens all the time. That happens, that's going to happen in a big way, in an unpredictable way as AI comes on, right? I mean, the, the as somebody who's a sophomore in college and who's in their head is going to end up uh, going to law school. I mean, I wish them good luck, right? Because people are going to be practicing law without a credential 5 years from now.
Not if lawyers have a say.
Right, right.
Yeah.
But that's
To protect the public.
right. Well, that's but that mindset, so which jobs, should we want an industrial policy to protect lawyer jobs? I'd be against it, but that there are going to be people who wanted to get in that profession or just got in that profession who are going to have to figure out something else, just as a manufacturing worker in an industry that China exports a lot into, are going to have to think in terms of something else. I think that's a real cost, and I think it's a very difficult for people to adjust to something else, and that the adjustment again mostly takes place with turnover in the labor force of old people aging out and other people coming into different jobs, and that's a very decentralized process. It's a process that the government probably doesn't know how to manage very well. The government does know, I think, how to protect jobs if it really gets desperate. But then the question is, do the long run benefits of that exceed the costs? And my guess is, and then, a lot depends on uh, your faith in the skill of the technocrats or the politicians making the decisions.
But I guess I don't want to let you off so easy, and I also want to drill down a little bit, which is to say, first of all, like I guess, do you find it plausible, that there is some, assuming like manufacturing jobs, it's not just going from one industry to another. They're not just getting, going from cars to robotics. Maybe they are, but China's awfully good at robotics too,
Right.
and much better than us, certainly at this point in time. Like, what if I guess one, do you accept the premise? Let's say for a moment that there is no that there is no later substitution, and maybe you don't, that is of
Okay.
of a type. A is there a cost to that? To say that people, who used to work in heavy industry now have to go be retail checkout, or nurses or things that maybe they're not predisposed to. And thing two is assuming there is that cost. Do economic models or trade economists do a good job accounting for that, or is that a gap? And I guess three, it's almost like you've referenced this before. It seems like you're channeling a little bit of a Nurse Ratchet, which is like you may not like it, but take your medicine and be good little boys and do it because those are the choices that life has given you. And but that seems demoralizing in some ways. So I was sort of threw a bunch of questions at you, but um, I don't know.
Yeah.
Yeah, respond as you see
So,
fit.
so people are losing human capital, and it would be nice if you could avoid that loss and not have any secondary effects from that, like not having to, you know, uh, have government policy cost $300,000 per job saved or whatever. Um, so, again, I'm just, yeah, if you had the omniscient, benevolent uh, political process, uh, and omniscient in the sense of knowing, uh, not just saying, all right, I'm going to save these jobs forever, because you wouldn't have wanted to save a cigar roller job forever in 1930s, even though if you'd saved it from 1930 to 1936, you'd have saved the economy some pain, right? But if you keep people doing cigar rolling and manual glass blowing forever, you never get any productivity gains. So, it's a complex problem that I think in the long run, and even sometimes in the short run, the decentralized profit and loss system moves the resources around and creates the jobs ultimately that are better than the jobs that get lost. Does that? Can I guarantee that always happens? No. Can I guarantee that it happens in the short run? Absolutely not. But
But isn't there some fat tail risk that, that the civilization dies, or at least your civilization dies in the interim? Like, if you just have this spiritual malaise where, all these, let's again, and male
well,
workers, suddenly have nothing to do that resembles what they perceive to be male work, and that's not an arbitrary thing that actually, is somewhat hardwired into them, and everybody just kind of loses the reason to live before they, is it right? I
well,
mean,
no,
you care about these things,
so I
yeah.
do look. I do buy the simple personality psychology story that men prefer to work with things and women prefer to work with people. And so if the economy shifts so that uh, we're making less things and more of the jobs are working with people, then more then fewer men are going to be working, more women are going to be working, and what are the social consequences of that? No, that's absolutely a threat. And again, if you have a government that's wise and benevolent enough to assess what that threat implies and to do something about it, go at it. Come up with a policy to uh, make sure that jobs involving working with things are that are a big enough share of the economy so that you have as many men working as you think ought to be, and uh, and that will reduce female jobs, correspondingly. I mean, if you know how to do that and you know you can do that in a way that doesn't damage, long run productivity and other things, have at it. But I doubt that we have the wisdom uh, in our political class to do that.
Right. I guess part of it is whether or not there is some, there's there's nothing worse than going out of business, so to speak, right? It's like there may be some long-term productivity drag, but if the alternative is you just kind of evaporate, for whatever reason, that seems like a pretty, I don't know, maybe in the aggregate, that's ultimately good, right? Firms that can compete, they go away. Maybe nations that don't compete, they also go away. But that's not. I don't know. I mean, is that how we should think about it or not?
I don't believe that trade is going to make the nation go away. I think I guess that you'd have to tell a story that there's that the shift from working with things to working with people, sort of, more jobs involve working with people than did before, and fewer working with things. That you could have done something about that. You didn't do
Oops, hang
something
on, I
about
lost my
that.
audio.
Uh,
One sec.
okay, I still hear you.
Um, Hang on. I don't know. Hang on one sec. I lost my audio. I don't know why. Is your
I hear you fine.
one sec? Can you hear me?
I've heard you all along.
Oh, now you're back. So for some reason,
Okay,
um,
so you still hearing me?
I am. I just my headphones disconnected for 1 second, so let me just get my audio back. I'm sorry about that.
Okay.
I just the table. Why are they not connecting? Um, Hang on. Apologies. Let's try different headphones.
Okay, are you hearing now? I'm guessing no. So I'll keep chatting here. Um, try keep
Nope,
trying.
nope, nope. We're back. We're back. Sorry about that.
Yeah,
Okay,
all
I
right.
can hear you now. All
Okay.
right. Sorry. You were in the middle of saying, you said you don't think that nations go away with trade, and then I lost you. I apologize.
Okay. So the story you could tell is, well, suppose the economy shifts uh, so that half the jobs involving working with things disappear and get replaced by uh, industries where working with people matter, and so there's this big social adjustment, and men really suffer, and then they're no longer marriageable, and you don't get marriage, and then all sorts of consequences flow from that. You can tell a story where your civilization dies because of the um, a shift from one type of job to another. I'm sure you can, but um, anyway, that's I don't think we're quite on the brink of that, and I don't trust government to. I trust government to announce that there's a crisis there because government likes to announce that there are crises, but I don't trust government to solve the crisis or to not make it worse.
And it seems to me, though, that that's a little bit of a rock and hard place. Then, again, from the conservative part of the brain is to say, well, yeah, it's a problem. And in an ideal world, we'd have a philosopher king who could solve it. But sorry, the principal agent, problem being what it is, you're SOL, right? That there's just nothing we can do. Is that really the position? Yeah.
Yeah, but I guess in part of the position it has to be that I don't think it's a crisis. I think that it's that we've never uh, so far had um, y- had a total loss of jobs. The economy has always been able to adapt to change. One like uh, many economists were forecasting all sorts of uh, economic damage from Trump's tariff policy, or the people generally, I think, tend to over forecast the costs of uh, events in the economy because they don't take into account adjustment. So, people thought that we were going to destroy the Russian economy with sanctions, and it turned out we didn't. The ability of economies to adjust, I think we shouldn't underestimate.
In other words, the inherent adaptability. But I suppose like one form of adaptability that we've seen all over the world, but not necessarily in the U.S., is out migration. Right, people move to opportunity. Right, maybe U.S. Manufacturing workers, they in an ideal world they just go to China and they get manufacturing jobs there, assuming China would let them.
Well,
But
I don't think that's kind of the margin of adjustment. I don't think that I think the migration takes place because you have better economic infrastructure, including capital, but most of all, including social norms and laws in some places than others. So, the reason why you can't make a good living as an average person living in Africa is that their overall economic infrastructure is not good. So when there are stories that, like, when a construction worker moves from Brazil to the United States, their productivity instantly goes up by a factor of 10. And that's just because there's better infrastructure here.
right. Well, I mean, I guess arguably part of what can make a particular place better at manufacturing is that they have better social and economic infrastructure for that as well, right? I mean, China has this, they have this thicket, this network of specialization in trade, right? And then they're very good at these things. They have lots of relationships. They have lots of suppliers. They've dealt with lots of breaks in the line. They have a lot of experience solving them and pivoting and iterating. And they have solved more of these. They're compounding exponentials there that they benefit from. And in theory, that could be the same kind of dynamic.
Right. No, that goes back to the possibility that by protecting certain industries, you're building human capital and maybe even other forms of capital that will benefit you in the long run. And then the question is, are you wise enough to know exactly how to do that? Um, and part of Dan Wang's argument is that China's leadership, their Politburo or whatever, is very heavily engineering based. They're engineers, and our leaders are lawyers, so they probably have a better idea than we do of how to promote industries and build that kind of human capital in industries.
So I guess then this is sort of a segue into another version of this question. Like, isn't there some sense in which, let's say that emigration was the optimal adaptation there, that what the economy should do is that the individual economic actors within it, they should, at this point, they should migrate to opportunity. And if China's flat out better at this, then the response for the out of work male, the archetypal manufacturing male, is they should be to move to China, but China doesn't let them do that. And A is like, how does that unfairness feature in the picture? And then I guess the related thing too is like this kind of broader policy of make everything for everybody everywhere, buy nothing. Like that's not trade, right? And in some ways, like it almost offends the sensibilities. And is that just wrong? Is that an instinct that a good trade economist should squash that sense of unfairness, or is there um, something there that they're either not perfectly capturing, or I don't know.
Yeah, I think this standard trade economic point of view is, well, fine. If you want to give it to us instead of exchanging for something, go ahead. The again, it's fighting the Keynesian instinct that your economy is um, limited by demand, and it's fighting the instinct that sort of only jobs in X are worth having, so that if people have to leave the automotive industry, they're something bad is bound to happen. They're going to um, you know they're going to leave the labor force, or they're going to become home health care aides or whatever.
Right. And so the sense of unfairness, not like, the non-fair play piece of it, that doesn't, we should pay no never mind, I guess. Putting the trade economist aside, what does Professor Kling
Yeah,
say? Yeah.
yeah, I believe that historical, so far, every technological change and every increase in trade has been a net boon to Americans. And I guess I'd be more worried about the adjustment to the AI shock right now if I were than I would be worried about the adjustment to a trade shock. I think the AI shock is going to be bigger. It's going to affect more people, more classes of jobs, and maybe happen faster than anything that we've had to deal with in the past.
So I'm going to come back to that in a second, but just, on this point, I guess maybe another way, and this is something we've talked about briefly in the past, but what about like positional status, right? In other words, like, is there some intrinsic value in being the best, that is not, that is not fully captured? And I don't know, in other words, like being, whether it's for strategic reasons, right? In other words, that can be a fairly binary outcome, right? That there is no second place, if in a kind of conflict, that the downsides of being second place aren't just being 2% behind the leader, but are in fact existential. Maybe that's part of it. But is there also some, I don't know, again, you come back to this word spiritual
Right.
implication of, for the national zeitgeist, to be number one and to feel on top of the world. Because that seems to be also something that maybe isn't well factored into the trade economic models, is ranking, right? Is the positional
Right.
status that you might just be doing as well as you can do, and the net consumer surplus is higher, but you've gone from fifth place to 15th place. And to simply say, or from first place to 10th place or something, to simply say that, well, no, but the consumer surplus is higher, so you're actually better off, even if it doesn't feel that way. I don't know. Part of my instincts push against it, but for reasons I can't fully put my finger on.
Well, I don't think you want to be, in fifth place in small machine warfare.
Sure.
If you're, if the other guy's drones can wipe you out, that's probably not a good long run situation. So that's a case that's clear, and you know, uh, any trade economist has to admit that national security matters. Um, then you have question is, if you go from, you know, first place in autos to first place in health, in elder care, have you lost status in some way? It feels, I admit, it feels that way also, but um, what is that enough of a? You have to really tell a story that turns that into a crisis, and not just sort of a proclaimed crisis as an excuse for government intervention, but a crisis that government intervention actually alleviates and makes better. And that's where I come
That's
across
for
as
you. So even if you're almost persuaded, because I guess the follow up question was going to be, there are fairly prominent people, and they don't all say the same thing. And I don't want to put words in their mouth, but anyway, Warren Buffett, Elon Musk, President Trump, who, his instincts can be mixed, but sometimes he gets these things directionally right. Like people are Noah Smith, who are flagging the China shock and China shock 2 as something that does seem fairly serious and maybe even existential, and it is something worth attending to. Are they wrong, or is it just they're not wrong, but you can't get persuaded on that second thing? Is okay. Well, what do we do about it? And the if the solution is policy intervention, then well, that's the default is that's going to leave us worse off in the long run.
Yeah, so I think the case is I have relatively more confidence than they do in the decentralized adjustment of entrepreneurs changing, of people uh, deciding on their own careers and so on. Relatively more confidence in that, and probably relatively less confidence in central planning for dealing with that.
But decentralization doesn't is agnostic as to national borders, right? Almost by definition, right? Decentralization, in theory, could shift these dynamic agglomerations of human and real capital just somewhere else, right? Decentralization could allow for that.
That's true, but so far, having a free economy with less government intervention has worked out better. I mean, South Korea works better than North Korea, and so on.
Right. Well, South Korea is going to be extinct though at this rate. I mean, but whether that's because of their free market or not, but either way, like if
Yeah.
survivability is the name of the game, there's an argument that North Korea wins in the longer run.
Okay, and if we
If
can,
things
yes, and if we can tie the low birth rate in South Korea to free trade, then that's really a good argument against free trade.
Right. So that's what we should be on the look. If we were gonna, the next question would be like, what would be if you wanted to play devil's advocate, not even to play devil's advocate, but if you just wanted to see if you were wrong, what would you be looking like? What would be the evidence that you were wrong on, like that you had to update your models or that these models were missing something?
One thing I'd be looking for is countries with lots more intervention developing higher rates of productivity growth, and just general.
That's not China.
Um, I still think our productivity is much higher, and I would bet going forward that our productivity growth is going to be higher because I think we're going to adapt AI better. Now, again, I don't know whether that could be the worst thing that ever happened to, at least to some
And
people.
I guess how would you're very skeptical of macro productivity measures. So how would you even measure that?
Um, oh, I guess I would just the uh, look in the traditional industries where we know how to quantify output, like agriculture or manufacturing. The challenge is we don't know how to measure productivity very well in something like healthcare.
But right in healthcare we don't. But manufacturing, I think we have a pretty good sense of where China's product, right? Their productivity is fat, I think is accelerating faster than ours, and they're moving into other things like pharmaceuticals and biotech, and I mean they didn't make cars 6, 7 year. BYD wasn't a thing, and now all of a sudden, right, they're a net export
Yeah.
of cars to Germany. Like that's remarkable. I don't think this ever
Yeah.
happened before.
Yeah, but I still think like the general trend for the US is for manufacturing output to keep going up and manufacturing employment to keep going down, and that says
True.
productivity is going up, and that's,
Yeah,
you know,
but it's
so
not about the fact that we're getting more productive. It's who's accelerating more quickly, right?
yeah,
That's what you were saying. Yeah.
I don't know.
Um,
Yeah, I'm gonna have to wrap up soon, so
Sorry. Yeah. So just quickly, I guess what you have a hard stop at 9:30.
yeah.
Yeah. So let's just pivot to the AI question and just break it into two parts. So like, just what are your thoughts generally on the shock that's coming, and then I guess the second order question is what might you do about it? And then maybe the answer is yet again, unfortunately, nothing, given the constraints we have on the principal agent problem. But yeah,
So yeah, I do think it will be a big shock. I mean, so far I think the things are working. I keep seeing just some amazing applications. It really is, I think, sort of the future is here, but it's not yet, not evenly distributed. When it gets evenly distributed, we come. I don't know what things will look like. It's like you're entering a rapids on a river, and you just don't know what's going to happen when you come out, or if you're going to hit a rock on the way, or tip over, or whatever. Um, but I just think it is going to be a big deal. Should we have some economic management of it? I think it's more likely that centralized management would would have some comparative advantage than for any other shock, just because I think it's just going to be so big and happen so fast. Uh, so I guess I would be less aggressively anti-interventionist for that shock than I would be for others.
what kind of things would you want to do? I suppose. How would you manage the shock?
That's a good one. I think um, um, I think trying to give people more practice at using it. And, so our education system right now is reacting with resistance, right? Oh, this is horrible. Kids can cheat. And I keep thinking that the kids who are cheating are the ones who are going to get ahead. If you show me two groups of kids right now and you got one group that the school has suppressed their cheating and the other group the kids are cheating, my money is on the cheaters to be more successful 5 to 10 years from now. So the I would somehow have the education system change to be leaning into AI rather than trying to suppress it. Um, and yeah, we can
You
look
would you would
forward.
just give A's to the cheaters, to the obvious cheaters.
Right, it's just like they're learning something and that's useful, and you're trying to teach them something that they're not gonna have to use. Let me give a specific example, computer science, right? If the a reasonable scenario is that nobody needs to learn how to code now, that, in 5 years, you could vibe code, a bank software application. And so that's we're in that world. I think a
Or at least fewer
world
people that need to know how to code. It's a little bit like not knowing how to rebuild your engine in a car. Like you still need some
or
people who
or
can
or
code.
not or not or how to fix your horse and buggy. I mean, yeah.
Right.
So the so and you know lay out a robotics future, right? Where robots are doing most of the manufacturing, they're doing most of your housework. So picturing that world, maybe there's just a lot more leisure. I mean, that's what Keynes forecast 100 years ago, that there's a lot more leisure. Um, and uh, but a worry is that sort of there's this tremendous concentration of wealth at the top in that environment. Some, people who are, uh, on the supply side in the AI industry, and the rest of us are paupers. You could tell,
But
along
paupers
with
in what
the,
sense? Not only in a relative sense, right? Because you would still
yeah,
say the consumer surplus makes us all wealthier and better off. It just may be that from the positional standpoint, we don't feel that.
right, yeah, and that could be destabilizing for society. You can tell that story easily. So it's very hard to predict. But anyway, I think that's going to be the big shock, and I'm not as convinced as I am about smaller shocks that there's nothing government should try to do to try to, like, mitigate the inequality or whatever.
So should we have, do you think that the trade embargoes on sending China, NVIDIA chips, I mean, it's a little more nuanced than that, right? They didn't send the best ones. They sent the second best ones. Like, do you think those were good, bad? I mean, in theory, good, but poorly executed. Like,
I don't know enough about the technology itself. My worry about sending an embargo is that they'll just make it themselves, and you're better off selling it to them than them figuring it out themselves and doing it themselves.
right. I mean, I think the argument is about, again, compounding exponentials is that if we had this lead now, and even if it takes them 3 years to catch up, the lead will get that much fatter over those 3 years and all of those things. I think the other sort of the flip side of the argument is also kind of interesting, which is like, well, that actually help financing this build out because we sell them the second best chips and that helps pay for all of this, which, there's a little, and again, if inevitably they're going to do it themselves. Um, yeah, I think that's the sort of the give and the take. And then I guess the other part of it from the shock standpoint is, right. I mean, there will be. I presume you would agree that there will be a whole class of jobs that we can't even conceive of, right? In the same way that we didn't have, before energy got cheap, there was no uplighting industry, or there was no spreadsheet, there was no, I don't know, FP&A industry before spreadsheets or VisiCalc or whatever it might be. Like that's part of the calculus too, I would think.
Yeah, we don't know. There'll be maybe new forms of entertainment, music, movies, games. Who knows?
Okay. So you're long in NVIDIA. That's good. I would never have picked you. You take the 22 the PD 22 PD ratio, and you're comfortable with that price because you think AI is going to be even bigger and bigger.
Um, you're making a leap there that I think that 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 no competition will emerge on that. But actually, 22 doesn't sound too high for them. I mean, that's like
Well,
the
there
market.
that's just the median. No, it's higher for some of the other names, but yeah. Right, and there's also the question of who captures those rents, and if it all goes to a consumer surplus, like it becomes and margins get compressed. Like that's another issue from the value of the equity there too.
Yeah, and
Um,
there are 100 companies trying to build apps on top of AI, and there are some investors who won't touch that with a 10-foot pole, and there are other investors who are all in, and I don't know which ones are right.
right. I do. I just won't tell. But no, yeah, I see that as an issue. Okay, so it's almost 9:30. I guess like to summarize, your view is in some ways at the base level is like if somebody's willing to subsidy, you're sympathetic with the traditional trade economist view. If somebody's willing to subsidize cheap goods, we should just enjoy the consumer surplus. The GDP forecast for negative drag is probably wrong for any number of reasons because those models are often wrong and they're not fully accounting for the adaptability and whatever fiscal monetary responses that could take place. But at a certain scale, and then maybe that's the AI scale. You could see a shock that would be worth an intervention, even if you'd have a lot of doubts that the intervention would be better, would be more beneficial than costly in the longer run. Is that fair?
Yeah, that's a good summary.
And I guess yeah. So I guess that's kind of it. I guess then the sort of spiritual, psychological element, or the national well being component of having people at gainful employment in work that maps roughly to real constraints in terms of what they excel at. You, I guess, what's your final thought on that? I don't want to summarize it.
I trust the decentralized process to deal with that problem more than I trust a centralized process.
So it's real, but again, interventions are more painful than they're worth.
Yeah.
Okay. Any final thoughts from the time that we have, which is, I think, none?
Okay. No, I think that's good. Thanks for the conversation.
No, thank you. All right. Very much appreciated. Okay. Thanks very much.
Bye.